I'm Howie Lim. This is Money Hacks by the Business Times.
New phenomena with social media 20 years, 15 years ago, 10 years ago even, this was not there, right? Through the advice and information, influencers influence the decision-making process of others on anything related to finance, from bonds to equities to crypto, traditional savings accounts, and even travel like collecting miles.
I guess people put that label on me, so yes. I think these days, a lot of us consume and learn about new things from social media. It's kind of taken over the role of some textbooks, some documentaries and TVs and movies. So we really do learn and consume a lot more. We don't read as much.
A recent survey shows that 79% of millennials and Gen Zs have sought financial advice from finfluencers in 2023. Are finfluencers taking over the role traditionally held by financial advisors, or is there space for both in the evolving financial landscape? Welcome to Money Hacks, a podcast series by the Business Times, where we explore useful financial tips to help you on your money managing and wealth growing journey. I'm Howie Lim. And if you have feedback or an idea for a podcast episode, do get in touch. btpodcasts@sph.com.sg. Helping us out today, Brian Seetoh, Financial Services Manager at PhillipCapital, and Dawn Cher, a leading personal finance influencer based in Singapore. She's also known as SG Budget Babe.
Finfluencers is one category of influencers or content creators that are getting a lot more traction. So we're seeing food bloggers, right? I know when I grew up, all my food recommendations was from magazines or from the Straits Times, the food column. Or sometimes on TV, you will see the TV show and the labels. These days, you go to any hawker or food court and you'll see the labels by the food bloggers, or the content creator, the food social media content creator, or the food blogger, the food YouTuber, and that's their labels that they stick on. So in the same vein, I think finance is just one of the many categories that has come up with the rise of social media.
Brian Seetoh from PhillipCapital acknowledges that the rise of finfluencers is impacting the financial advisory industry, and social media is playing an increasingly important role with regard to financial education.
Through social media, a finfluencer plays three roles: entertainer, educator, and community builder. So social media amplifies the reach of a finfluencer globally if he does it right. The reasons why they exist usually are very different from a financial advisor. They are incentivized very differently. For a finfluencer, they look at how they can make something traditional appealing. So for example, one of the most popular videos of a finfluencer is titled "The Number One Wealth Killer That Nobody Talks About." The thumbnail has a finfluencer's face and his finger points to a car. It's a clear sign that this is entertainment and education. Clearly, the car is a potential wealth killer. Inside the description box below of the YouTube, you can see quite a few referral links. Some are open to trading accounts, others are open to join his Patreon community. He invites his viewers to ask him and send him questions so he can do more content. So this is community building, using social media to build a tribe which has elements of education, engagement, community. They build upon themselves and develop upon itself. But likely he has a team to help him too. For traditional financial advisors, I would think that perhaps some of them do go that route, but usually they are increasing, but few currently.
Whoa, that sounds like there might not be room for both to exist. Here's Dawn Cher.
I think there will be room for all, because finfluencers, especially those that go really viral, you realize that they're sort of like the welcome gate, in a sense where you have no idea how to manage your finances. You are starting to want to get more savvy. You would then consume finfluencers content, and the majority of the audience would be at that level. That's where the math numbers are, because that's where you would then start to look at basic content. So then finfluencers who are catering to these basic content would go viral. They'll be the ones with your large followings. And as you get a bit more savvy, that level of content may no longer serve you. You would then have to look for other finfluencers who are a bit savvier or who talk more at length, more in-depth, and they cover more ground.
Indeed, I do think that traditional financial advisors have to make themselves more public. That means they should be able to be found online. I think that there are some financial advisories that do assist their financial advisor representatives to put them out on social media. Yeah, I think there is definitely a place for that, especially among the younger generation. And I think for the older generation, they sometimes also may want to see whether the financial advisor representative is on new media or on traditional media platforms. They like to see their thoughts, their stand on certain things, and then they may engage them. Easier to engage them.
While social media has brought increased access to financial literacy and advice to many people, the quality can be inconsistent, surface level, and susceptible to fraud and misinformation. Personal finance influencer Dawn Cher feels it's necessary to make the information easily understood.
When you consume finance information on social media, it tends to cut through a lot of the jargon. So when I first started my blog over a decade ago, I don't write in the language of Wall Street. I don't use all the terms and big flowery languages that they use when you read an analyst report, for instance. To me, it's really very simple English, easy to understand. And it's so convoluted that you have to reread the sentence multiple times to understand what exactly is the point. But on social media, it's very bite-sized. It's in simple English with almost zero jargon. And if there's any term, it usually is explained. So it's really just making it easier for people to understand what they're even listening and watching. I think the risk would be if you rely 100% or almost entirely on finfluencers to make your financial decisions, then you would be in trouble because everyone's financial circumstance is different. And the finfluencer has zero clue about the financial circumstance of the reader or listener who's tuning into their content because they're creating it for a broad base of audience.
Fair enough, but how can consumers be assured that they're receiving credible and reliable information? More with personal finance influencer Dawn Cher and Brian Seetoh, financial services manager, PhillipCapital, in a moment.
If you've been a fan of the podcast Mark to Market, Wealth BT and Property BT, they are moving to a new listing, BT Correspondence. Look for episodes every Tuesday from October. All the insights and analysis and market trends, property, wealth, and soon mobility too. Powered by the Business Times journalism of Genevieve Kwa, Leslie Yee, Ben Paul, and Darren Wong. Because great reads should be heard. The BT Correspondence channel. Find BT Correspondence wherever you listen to podcasts.
And now, back to Money Hacks from the Business Times.
8%, 10%, okay, with an asterisk there. And we all know that the devil lies in that asterisk and what it really stands for, right?
So, are finfluencers taking over the role traditionally held by financial advisors? That's what we're trying to figure out today with personal finance influencer Dawn Cher and Brian Seetoh from PhillipCapital.
At some point, perhaps there will be some regulation. It has to be reasonably lighter touch, a certain sense. Or maybe the disclaimers have to be a lot clearer. So for example, if I'm a finfluencer, my job is about talking about equities all day and about what positions I take, then the regulator has to think very hard on how they write their regulation on finfluencers like this, especially because finfluencers are paid usually by three ways. One is views, the other one is sponsorships, and the third one is their investment acumen, or if all their followers buy after they buy, then they will make a lot of money, right? So then there's very clear potential conflict of interest.
Whoa, Brian's not pulling any punches. Sure, there's been an aggressive number of influencers hawking their wares, such as financial freedom and such, appealing to Gen Z investors, which would make traditional advisors clutch their pearls. In fact, YouTube has begun blocking access to videos from several financial influencers and even some registered analysts in India. But Dawn doesn't feel it's all finfluencers' faults.
So the listener and the audience has to take that responsibility onto themselves to change and tailor-make whatever they're consuming to fit their own situation. That's where learning and consuming finance content can actually be very useful. I'll use an example. If we talk about, let's say, credit cards, a finfluencer could say this credit card is great and they recommend it because of reasons ABC. And they may or may not explain whether or not there are some trade-offs or cons. Now, if they recommend without talking about the cons, it's really up to the consumer to go and figure it out. So some cards, for instance, require you to make payments in certain currencies or in certain modes, or only at certain merchants, then you would get those kind of rewards. But if you don't even shop at that merchant, well, the influencer would have no clue. So they're not in the wrong by saying this is the best grocery card, for example. But if you don't even shop at that grocery store, if you just took that content, applied for the card, went on to spend it, who are you going to blame when at the end of the statement month, you realize you weren't given the rewards that you thought you did?
That said, she does welcome some form of regulation.
I think any guidelines or regulations to make the industry and scene better and more beneficial for the consumers and listeners and audience would always be welcome. And the ones who would be worried or shun away from it would usually be those who have something to fear. Because regulation, as long as it's not just top down, it's also bottom up. So you're really listening to what's working on the ground, then that makes sense and we'll incorporate it. Honestly, though, I feel the biggest risk is not from influencers. I feel the risk is when finance brands or finance projects or sponsorships are being touted by folks who do not even understand finance.
Yeah, that sounds challenging for folks who actually know what they're talking about, especially when it's starting to look like any old body can talk about anything, really.
And I'll give an example. It's very easy, for instance, to market a finance product in terms of the returns or the rewards that you would get. And you could say like up to 8%, 10%, okay, with an asterisk there. And we all know that the devil lies in that asterisk and what it really stands for, right? But the lifestyle folks or someone who is not really financially savvy, who doesn't understand the product, might just fall for that headline marketing message and propagate that. And they'll tell that to everyone else who's listening. Not wrong. But if you really zoom into the details, it could be that that has certain trade-offs. For instance, you might be getting 8% or 10% only if you spend $2,000. Then the question is it realistic? How many people can spend $2,000? Are you really articulating that, right? Or are you letting people to, well, you should go and find out what the asterisk is. This is an ad. I'm not going to tell you so much because I don't want to present the negative side of it. But to us, we don't see this as a negative because everything in life, every financial product always has a trade-offs. And if you look at the way finfluencers, the way we create content is very different from someone who is not really financially savvy or finance trained, creating the content on the same product or service. You get very different outcomes.
Brian Seetoh from PhillipCapital has some advice on how to sift through the noise.
I think on social media platforms, you would see often that advice is being sought and there's a plethora of data and different viewpoints and perspectives. Ultimately, at the end of the day, the individual himself has to, when he wants to make a purchase or wants to look at his insurance or unless it's only in respect to investments, he can DIY. Most of the time, it's potentially more cost effective to find a professional financial advisor. Look through like what's out there in terms of the social media, in terms of content to see whether or not that gels with the reality, to see whether or not the advice also is something that can be done in Singapore. So some of this advice is maybe from the United States or Australia or UK. It may not be so easily implemented in Singapore. And then look at if they're looking to make some investment or purchase, for example, to talk to different financial advisory representatives, can work with multiple service providers, find which one they work better with, and then from there make that decision.
And personal finance influencer Dawn Cher wants to highlight the integrity of some finfluencers and ways you can spot the frauds.
I had one unregulated platform approach me. I think there must have been at least 10 or 12 emails by now. I keep telling them no. I'm not keen on this gig because number one, they're not regulated. Number two, I don't believe in the message that they're trying to put out. And I wouldn't in good faith do it myself, much less recommend to my best friend or recommend it to my larger audience. So I don't even want it no matter how much they offer me. And they just kept trying to up the rates. I'm like, no, I'm just not interested. Well, some lifestyle creators have taken that gig up. And whenever we influencers see that content, we're like, do they know that it's on the MAS watch list? Do they know that it's unregulated? Do they know the trade-offs, or are they just taking the sponsorship money and just talking about the pros of it without talking about what the trade-offs and the cons are? So if the finfluencers are being regulated and we kind of already understand this, we reject deals like this because we know what are the repercussions to our reputation. What about the rest? Because that's where the bigger market is. Would it be fair if you only regulate the finfluencers and not influencers?
Them's fighting words. She might not be wrong. It seems the Monetary Authority of Singapore receives an average of 5 complaints a year against financial influencers. But before you pass out from Schadenfreude, most of the complaints received were in relation to remarks made by finfluencers, yes, who were not providing any financial advice though. Hence, were not subject to MAS regulation. Cue tumbleweed rolling across the ground of the wild, wild west. A big thank you to SG Budget Babe, Dawn Cher, a leading personal finance influencer based in Singapore, and Brian Seetoh, Financial Services Manager at PhillipCapital. And don't forget to send us an email if you have feedback or an episode idea, btpodcasts@sph.com.sg. I'm Howie Lim, and this has been Money Hacks from the Business Times.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts. Or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.